Hello everyone, I'm Uros Markovic, Calgary and area realtor, and welcome to June 2025 real estate market update for Calgary. After months of rising inventory and cautious buyers, June 2025 confirms what many of us expected. Calgary's housing market has officially entered a new phase of stability. Prices are leveling, more listings are hitting the market, and while sales are slower than the last year frenzy, they remain above historic trends. But what does it really mean for you? In this update, I will break down everything you need to know. The latest sales and pricing trends across all property types, the strongest and weakest performing districts in the city, and my advice segment for buyers, sellers, and investors. So let's dive in. We will start with a city-wide snapshot. In June 2025, there were 2,568 units sold, down 17% from the June last year, but still 11% above long-term average. There were 4,842 new listings, up nearly 12% from the last year. And inventory reached 6,740 active listings, higher than the last month. Benchmark price was 589,900, which is down 3% over the last year. Months of supply were 2.6 months, still considered a balanced market. So while the volume of activity is softening than the last year, the fundamentals remain strong. Depending on a property type, community, and the price range, some prices are holding, especially in a lower supply segment. So let's break it down by property type. We will start with detached homes. Sales recorded were 1,275, which is 8% lower than the last year. Benchmark price was 769,400, 1% higher than the last year, and we had 2.35 months of supply. New listings were 2,419. The strongest performing district was West District, with a benchmark price of $1,009,000, which is 3.74% higher than the last year. And the weakest district was the Northeast District, with a benchmark price of $593,400, or 2.66% lower. Detached homes remain a high demand segment. While prices are only up 1% year over year, it really depends on what segment and a part of city you're buying, especially if you're looking into family-friendly areas or you're looking more up to west side of the city. Semi-detached segment recorded 256 sales, which is down 1% over the last year. Benchmark price was 697,300, 3% higher than the last year. And we had 2.12 months of supply, which is considered still balanced market. New listings were 428. The best performing district was City Center, with a benchmark price of 967,800, which is almost 5% higher than the last year. And the weakest district was Northeast District. Benchmark price was 434,800, down 1.43%. These homes continue to attract upsizers and downsizers alike. Prices are rising faster in central areas with walkability, amenity access. Alright, we are now looking at raw townhouses. 458 sales recorded, down 15% to the last year, and the benchmark price was 453,600, down 2%. Months of supply 2.44 months. New listings were 764. And again, going to the top performers, Northeast District was top performing district for raw townhouses, up 0.5% over the last year, and the softest performer was North District, down 4.38%. Townhouse segment remain go-to option for affordability with space. And the last segment for today is apartment condominiums. Sales were 579, 36% lower than the last year. Benchmark price was 335,300, 2% lower than the last year. Months of supply were 3.6 months, still considered to be balanced market. New listings were 1,231. And now let's take a look at the best performing districts for apartments. Northwest District, where prices are up nearly 2%, and the lowest performing district was Northeast, where the prices were down for 4.51%. Alright, now we are in an advice segment, and I'll start with my advice to the buyers. Well, the days of 10 offers might be over, but prices are not dropping much. If you're shopping under 700,000, move quickly on homes that show well. Apartments and townhomes still offer a lot of value. For your sellers, preparation, marketing and pricing are everything. If you're in a hot district, you can still sell fast, but buyers are getting more selective. Now it is not the time to test high. Investors, with rising rents and stabilized interest rates, cash flow is improving again, especially in condos and townhouses. Just be mindful of ongoing condo fee trends and hold long term. So what is the bottom line? Calgary's housing market is stabilizing, not sinking. Price growth is slowing and even reversing in some districts. As summer heats up, so will opportunities for those who understand the numbers. If you want help breaking down what that means for your next move, buying, selling or investing, reach out. Let's talk the strategy. Thank you and see you next month.